Let's try to get some insights on what is moving the Forex markets with Mario Singh, a director for trading and education at fxprimus.com. All right, let's talk about China. What didn't happen and what did happen over the weekend? We saw inflation numbers running high to 5.1%, certainly at the high end of the range that we were looking out for, which was anywhere between 4.5% and 5.5%. There was no rate hike. If you look at some weekend comments from a former PBOC advisor at a hedge fund conference, his name is Wu Xiaoliang, he actually says raising rates is not the way to go because China is having to deal with huge money inflows, plus food inflation at nearly 12%. You don't address food inflation concerns with an interest rate hike.
Well, let's check in with some of the numbers, Chloe. We saw three big numbers that came out over the weekend. Number one, inflation, 5.1%. Trade balance, $22.9 billion. And the third one was industrial output, 13.3%. Now, what does all these mean? All the figures over the weekend literally blasted through all the economists' estimates. So what it is right now is that China is having skyrocketing numbers. But at the same time, you notice that China is still adamantly not raising interest rates. The key question is why is that? It's down to two reasons. Number one, they still are dependent on exports, and number two, if they were to raise rates right now, it would draw more hot money flows, which would be counterproductive.
Renminbi, and even with what's happening in the NDF market, as Wang Qishan sits down with Gary Locke and other officials, it looks like even the NDF markets are not pricing in much of an appreciation. So it looks like they're going to keep on having to tweak banks' reserve requirement ratios. I mean, but ultimately, at the end of the day, how much they're going to dip into the money markets to boost liquidity, when at the end of the day, a lot of the big cap companies and banks are having to suffer from a liquidity squeeze. It looks like it's going to be a really fine balance, even just a few months down the road.
I agree with that. But at the same time, traders and investors, they are kind of losing patience. It's the sixth time that they have increased credit reserve ratios. It's got to be about time that they literally raise interest rates. But they have that delicate balance literally in balancing exports and increasing domestic consumption at this point.
Maitri?
Yeah, Mario, if I can bring your attention to Europe, I know the issues here have, while they've dominated the headlines, they've not really done much to move the euro beyond that 132 level. When we take a look at stories that come out, say, for example, the one I was reading out from the FT this morning about, say, for example, the Eurozone pretty much going out and doing what the ECB does, go out and buy government bonds of these peripheral countries. Is that news that can move the euro, or is that something that the Forex market is just going to shrug off?
Well, I think the big news really is still about the China story, and that's going to be continuing to be playing out literally this week. However, touching on your point, the one big problem that's experiencing the whole of Europe right now is that they have one currency and literally so many different treasuries. So at this point, they've got to get their act together because everyone in the market right now is still on tenterhooks because of contagion. The next person to be possibly Portugal. No one really knows, which is why it's keeping euro dollar under pressure right now.
Right, Mario, let me get your attention to the sterling dollar. We've seen it reach highest levels since late November. What's your outlook there? Are we going to break the 1.6 level, and what's going to factor into that?
I don't think that's going to break the 1.6 level at least until the end of the year. I'm seeing strong resistance at 158.20. I do see a good sell about 157.85. I still see the sterling under pressure because of two reasons. Number one, risk aversion flows to the US dollar. At the same time, I'm seeing sterling in terms of their fundamental prices. UK asset prices are not doing well towards the end of Q4.
All right, we'll have to leave it there. It's all very exciting. Mario Singh of fxprimus.com. Thanks again for joining us.